Morning everybody, it's Chris from Serene Education. It's Tuesday the 9th of October 2018 and I'm looking at the matrix this morning just to get an understanding of what's been happening and if there's anything out there that I need to be focusing my attention on. I mentioned yesterday we should be looking at the commodity crosses, in particular against commodity risk appetite against risk aversity, and the six that came up were these ones over here: the Australian crosses against the Swiss franc, the yen and the US dollar, and the New Zealand Swiss franc, the yen and the dollar. Having said that, we're starting to see a bit more positiveness coming through here on the Euro New Zealand and the Pound New Zealand. So clearly New Zealand dollar not having a good time, as you can clearly see across the board here. So one would look at these five, followed by the Australian crosses. The Euro Australian dollar not as great as its counterpart, but the Pound Australia pretty much there. You just got to keep an eye on that 4-hour time frame. Have a look and see what's stopping price from moving with certainty to the upside. Other than that, there are a couple of other ones that you could look at. The New Zealand CAD. So these are two commodity crosses against each other. So there again, just trade with caution when it comes to these two. Australia, New Zealand. There again, similar to the Euro Pound, more of a knee-jerk reactional trade system. Here again, look and be cautious when you trade this particular pair. I'm going to be spending more time looking at these four over here on the hard left-hand corner, which is the matrix, the Forex majors. Apologies. And they're going to be put together using the Forex main Ezee template. So let's crack on with that. First and foremost, I'm going to look at the euro against US dollar. So I've got this on the weekly time frame, and this is for the reason because I already know what price has been doing on the monthly. However, if you're unsure, let me just go back to the monthly again, just to highlight an area where what we've seen this so far this year. A lot of hesitation over the last 4 or 5 months. Price has been very, very apprehensive and very speculative in the movement. This is essentially after the break low, after price failing to rally above the January high, which is in contact with the 200 period moving average on a monthly time frame, which is the channel high, mind you, on the larger picture. So there again, you can see that over time price has been falling and she's been moving within this channel. And the 200 period moving average has done a fantastic job of supporting price through the years. However, through 15, 16, and 17 price has been trading below the 200, and on the correction high you can see that the 200 period moving average is doing a fantastic job of resisting price, which in itself is around that channel resistance level, high level. So we have a resistance factor here which has been in play for multiple years, and price has found resistance at this particular point. So under the 200, which was previous support, and now a more of a resistance factor. So price has been falling, and she's fallen back into the 50 period moving average, which previously acted as a resistance level but also a support level. And over the last 3 or 4 months, price has been supported by that level. Having said that, you'll notice that we haven't had any major corrections high on the 50 period moving average. We've seen a lot of hesitation creeping into price action as price has now moved sideways over time, through time. And this is not a good sign. We had 2 months ago, we had this piercing candle, which was potentially construed as a hammer. However, we haven't seen any building blocks since then. If you're going to pick up a hammer to build something, in Japanese terms, prosperity, new beginning, then we need to see bullish sentiment coming through each of the months, progressing further into 2018, and that's failed to materialize. Last month we had signs of building taking place. However, by the end of the month, price had pulled all the way back again, and we're left with a spinning top and a slight close lower. Higher than the previous candle. So not all that great in itself. The indicators over here also indicating negativity on this particular pair. Through this period, through the last 2 years, in fact, the fast line, which is the blue line, has been trading above the slow line, which is a support mechanism, correcting, coming back at a correct, so support, and it's only just crossed over here, fast line below the slow line, which is a negative sign. So from here, positive, through this period, this building period, through here, which is essentially through this period, price momentum has been positive. We also saw price, just clean this chart so we can give you a better idea. You'll see that over the years, this testing the same levels before, but the RSI was weakening. So convergence, so less sellers, genuine sellers within this consideration, and more buying sentiment, and hence the reason why the MACD was showing us a positive sense to this point. However, it's all changed now. MACD is negative, RSI has now dropped below the midline. The only thing that is supporting this particular pair for the time being is the 50 period moving average. We need to see if we are to see a continued move low as we've seen over the years, and this goes back the best part of 10 years, we need to see the 50-period moving average being breached and price closing below it successfully. In doing so, she'll be breaking through a major resistance level and a support mechanism that we've seen over the last 3 years, which would then bring into the picture these lows that we saw over 2015 2016 as a viable target level, long-term target level for this particular pair. So here, patience is important because the return on time invested is well worth the effort. So here again, don't look to trade the euro against US dollar currently because of all the volatility she's currently trading within. Your risk goes up because we don't have any genuine directional markers set by buyers or sellers out there. They've been clearly fighting with each other for the last 4 months. So why would you want to get involved? Rather stand on the side, let the newbies fight it out amongst each other, let the speculators fight it out amongst each other, and once we get a clear directional movement from the price herself, who the genuine sellers or buyers are, then we'll wade in. And by that stage, we'll have a clearer picture. Our risk will be less, our probability will be far greater, and then we can trade with far more certainty. Okay, so here again, just play caution to the wind. If I drop down to the weekly, you can clearly see that picture becomes even clearer in terms of the hesitation that we're seeing currently at this level. And hence the reason why the last 4 or 5 months is represented in this range. It's not great. It's no trading at all. It's high risk. It's risky. Very risky. So here again, we need to be below this yellow line, as I mentioned to you, which will be below the supporting factor here, which is the 200. So the 50 on the monthly is the 200 on the weekly, and we need to be below that to get a more clearer TP1 over here, for example, followed by TP2 below that, which is the 2016 and 2017 support lows. Okay. Here again, notice we've gone sideways for so long. We're trading between 2 moving averages, which is a no-no. Dealing in a strong trend, up or down. Price needs to be either supported by the moving averages or resisted by the moving averages. So you cannot be trading within the moving averages because it tells you that there's periods of consolidation, because both short-term and intermediate traders are not moving with the long-term bias in this case. Fast line is above the slow line and the histograms over the midline. These are positive signs, but we've been moving moving sideways for so long that the MACD is now corrected. So we were in this sell-off of the year after the January, February, March, and April consolidation at the ceiling level, which is the channel high, the breakout, the MACD went negative, and the RSI crossed below. Now you'll see the RSI has also pulled back recently within this consolidation, however, still remaining below the 50% level, which is a sign of negativity. So here again, continue to look for selling sentiment. Having said that, as I mentioned to you in the monthly, we need to be trading below the current support level, below the 200-period moving average, to be a more defining signal of intent, continued selling intent. We don't have it at the moment because price is moving sideways. The only other option would be to see price trading above the current resistance levels within this consolidation, which is above the 50 MRs, to then be more of a long-term correction high again and a channel resistance level high attempt. Trading within this band is no trade. If I could spell no trade, it would be great. There we go. Come on, play catch up. No trade. Okay, it's just too much risk. You're trading with the dumb money. Retail traders. Speculators, for a bit. They don't move markets. Okay, so here again, just understand that and take it on board.